Let's start with illustration number 2. Swaraj Mart furnishes the following information. Transaction during the month of April 2017 are as under. 1417. So in my solution, I skip the date and ledger folio and other columns. I will directly pass a journal entry and I will post the values in the debit and credit. That's all. And of course, I am going to skip the narration also to save the time. That may be usual one. Based on normal repetition, you can solve that yourself later. So 1/4/2014, the business started with the cash. So cash and then capital. Capital is credit balance, cash is debit balance. For the business, because of introducing the capital, the cash increases, capital also increases. To increase the debit, you have to debit it. To increase the credit, you have to credit it. So cash account is debited, capital account is also debited. That's the logic. Is that okay? Let me solve this illustration here. Cash account debit. Date 1. Journals. Date 1. Cash account debit. To capital account. This value being 1.5 lakhs. On 1/4/2017, the next one, goods purchased from Manisha. Goods purchased and name of the seller is also given without whether it's a cash or credit transaction is given. Then automatically we will assume this is being credit transaction. If it is being the credit transaction, the party's name should be taken. Party's name. And goods, one account, another one is Manisha, party's name. Goods being assets, so debit balance. Manisha, from whom we have purchased without paying the value, then automatically Manisha becomes liability. Liability means credit balance. Because of this purchases, the goods will increase, you have to debit it. Debit is going to be increased means you have to debit it. Manisha is default credit balance. To increase that credit balance, you have to again credit it. So Manisha's balance is also increasing. Goods balance is also increasing. Goods is an asset, owning. Manisha owing. I bought the goods, for that I supposed to pay to Manisha. Okay. Whenever it is a purchases, we don't use the term goods. We can use the term purchases. Similarly, whenever we sell the goods, we use the term sales rather than goods. So I am replacing the goods with a new term called purchases. So second one, on the same day. Purchases account debit. So purchases represents only the goods. Purchases account debit. Okay, purchases account debit. Purchases account debit to Manisha. Okay. This value being 36,000. Debit and credit. Okay. This is inner column. This is outer column. First column and second column. Right. To save the space, I have done this way. On 1/4/2017, stationery purchased for cash. So stationery one account, cash another account. Both are asset. Asset means debit balance. Because of purchasing the stationery will increase. Because of making the payment, cash will decrease. So stationery being debit, to increase the debit balance, you have to debit stationery account here on the same date. So 1. The entry being stationery account debit to cash. I have paid the money immediately to cash account. The value being 2,200. Is that okay? Now, on 2nd April, open a bank account with SBI. Rupees 35,000. So, bank account, bank is one account, and for that the payment is made. I assume that the payment is from the cash box, also an asset. So cash is also asset, debit balance. Bank is also asset, debit balance. Because of opening the bank account, bank account will increase, so debit it. Cash balance will decrease. To decrease this, what we have to do? Debit balance to be decreased by crediting it. So cash account should be credited and bank account should be debited. So on 2nd April, bank account debit. Bank by default an asset, so asset is a debit balance. As the bank balance increases, I am debiting. Cash is also an asset account, usually debit balance. It decreases. To decrease the debit balance, I have to credit it. So bank account debit to cash account. Bank account debit to cash account. This value here being 35,000. 35,000. Is that okay? And on 2nd, another transaction happened on the same date. Goods sold to Priya. Goods sold to Priya. Okay. Now, goods and Priya account. To account. Goods is an asset, so debit balance. And Priya, we sold without getting the money. Then the party is liable, so party is also debit balance here. Asset. Asset means debit balance. Goods is also asset, debit balance. Now, because of this sales, the goods what we have is decreasing. So, the debit balance is going to be subtracted. How can we reduce the debit balance? By crediting it, it may be decreased. And Priya account is also an asset, debit balance. Because of the sales, the Priya has to pay us another 16,000 extra, or this debit balance is increasing. So, debit balance increases can be passed as a debit only. I am debiting him again to increase the value. And goods value is usually debit. Because of the sales, the goods is going to be reduced, so I am crediting it. On sales, usually I won't name this being goods, I am going to name this being sales. For the purchases and sales, always the goods are named as purchases and sales, not the same goods name. Goods name cannot be written here. So the third one being Priya account debit. Priya account debit. Okay. Priya account debit and to sales. This value being 16,000. This value being 16,000. Then third, on the other day. Okay, this is also the same date, 2nd. Now the 3rd. 3rd April, received a check of rupees 16,000 from Priya. Received a check of rupees 16,000 from Priya. Okay. So check represents bank balance and Priya is a party. Okay. Bank balance is usually asset, right? So bank is an asset. Okay. What are the two items are there? Check, otherwise named as bank. Bank. This is asset, so debit balance. And Priya has to pay us, so debit balance. Because of the payment, the money now comes into your bank account. This debit balance increases. Because of the payment, the due payable by Priya will be reducing. To increase the debit balance, you have to debit it. To decrease the debit balance, it should be credited. So Priya should be credited, bank account should be debited. So it happens on 3rd April. So 3rd, the entry being debiting the bank account. So bank account debit to Priya account. This value being 16,000. This value being 16,003. Then let's move on to the 5th one. 5th April, sold goods to Nidhi, rupees 14,000. Sold goods to Nidhi. Always we have two items here, goods and Nidhi. Okay, goods is always asset, so debit balance. And we are selling to Nidhi means without money, right? So selling to Nidhi without money means Nidhi has to pay. So Nidhi has to pay means it is also debit balance. This is also debit balance. On sales, goods will be decreasing. It should be subtracted. And because of the sale, Nidhi has to pay us another 14,000 excess. So debit balance should be increased. So Nidhi's existing balance debit supposed to be increased. The increase can be again added. Goods is usually debit balance. Because of reduction, it is going to be subtracted. So to subtract this, we have to credit it. And when it is being the sales, we usually won't name this being the goods. It is going to be replaced with what? Sales. Now the ultimate entry being Nidhi account debit to sales. Nidhi account debit to sales. Okay. Nidhi account debit to sales. To sales. This value being 14,000. This value being 14,000. This happened on 5th, the date of transaction being 5th April. I named this being 5. Next. On 8th April, I just erase all these things, right? So, I'm going to pass the entry for the 8th April. Nidhi pays rupees 14,000 cash. So, Nidhi and cash. Cash is a real account, cash is an asset, so debit balance. If Nidhi pays, I get the money, the debit balance will increase. Who is Nidhi? Okay, who is Nidhi? As per the 5th transaction, Nidhi is an asset, debit balance, right? So, Nidhi is an asset. From Nidhi, we have to receive the money, so asset. Asset means the debit balance. So, this debit balance should be subtracted because of the payment. So, Nidhi has to pay 14,000 rupees on 8th April. Nidhi settled that 14. So, automatically the balance will be 0. 14 is the debit balance. On payment, it should be reduced. So, 14 minus 14 is 0. Hereafter, nothing is recoverable from Nidhi. So, on 8th, the entry being on 8th. The entry being, we get the cash. Cash is by default debit. As it increases, again, you have to debit it. So, cash account debit. Cash account debit, the value being 14,000 to Nidhi account. To Nidhi account. Okay. Value being 14,000 rupees. With that, this one is also over. Now, let's move on to the 10th one. 10th April, purchased goods for rupees 20,000 on credit from Ritu. So, we have goods as well as we have another term Ritu. Goods is always an asset. So, debit balance. Ritu, from whom we have purchased without payment of money. As we have not paid any money to the Ritu, now I am liable to him. So, liability is always credit balance. Because of the purchases, goods will be increasing. And Ritu, from whom we have purchased, we have not paid, means I am liable to pay him. So, it is also increasing. So, goods will also be increasing. Already debit balance, to increase it, you have to debit it. Ritu is credit balance. Because of this transaction, credit balance increases, so it should be credited, right? Always remember, any purchases, though it may be named as goods in the transaction, it should be replaced with what term? Purchases. It should be replaced with the term purchases. Now, the transaction happens on 10th. So, 10th April, the entry being, I have to debit the purchases account, not the goods account. Purchases account should be debited. So, purchases account debit to Ritu account. Ritu account, the value being 20,000 rupees. The value being 20,000 rupees. You just join with me in answering all these things, right? And on 14th April 2017, on 14th April 2017, insurance paid by check, by check. So, we have two items. One is insurance, another one is bank. Check represents only bank. So, bank is also asset, debit balance. Insurance is nothing but because of the payment of that, I have the risk coverage. So, it is also an asset. Short term assets are expenses. Very, very short term asset is an expenses. Okay. So, debit. So, insurance is the debit, bank is also debit. By making the payment for the insurance premium, your bank balance will decrease. It means debit balance will be decreasing. And insurance payment made, so the insurance money will be increasing, so it should be debited, right? Now, to increase the debit balance, I am debiting. To decrease the debit balance, I am crediting it. So, bank should be credited and insurance should be debited. So, on 14th, the entry being insurance account debit to bank, Is that okay? To bank account. This value being 6,000. Then 18th, we will move on to the 18th one. Paid rent rupees 2,000. So, rent and cash. So, we have two aspects here, rent, another one is cash. Rent is also debit balance, cash is also debit balance. Rent is an asset, right? The expenses and asset will be debited, cash is debit balance. Because of the payment of rent, the rent will be increasing, the debit balance is increasing. Because of the payment of cash, cash will be decreasing. Otherwise, the debit balance should be decreased. To decrease the debit balance, what we have to do? We have to do the reversing it. So, credited. So, the entry here being on 18th, rent account debit to cash on 18th April. Rent account debit to cash, the value being 2000. The value being 2000. This is over 18th. And on 20th, goods costing 1500 given as charity, right? Given as charity. So we have goods and charity. Charity is otherwise named as donation, right? Donation, clear. And goods is always debit balance. Donation should also be debit balance. Okay. How the donation being the asset, as not asset and expenses like. Without reciprocal benefit, if you are making any payment, also on expenses and losses. Either you can name this being the loss or loss for the charity cost. Whatever the assumption may be, it's a debit balance. And donation, debit balance, it increases, so it should be added back. And because of this donation, the goods what you have will be decreasing. It should be subtracted. It means the goods should be subtracted. How do I subtract the goods value? By crediting it. Now, always remember, when you purchase the goods comes in, the goods will be named as purchases. When the goods are sold, that goods are named as sales. If the goods purchased goods are issued or used for other than sale purpose, then that time this will be always named as purchases. Is that okay? Purchases. Make a note of it. Okay. Now, so in your organization, goods will come in. Goods will come in. That will be now always named as purchases. Okay. The goods may be around 100 rupees. The same 100 rupees worth of goods could have been sold. Okay. As rupees 120. In that case, this will be named as what? Sales. Okay. This is predominantly happens. Apart from that, there are other reasons may also be exist, which is nothing but other purpose means other than sale, like charity, donation, or it may be taken by the owner named as drawings, may be given to the employee as an appreciation bonus, that is called bonus or salary, or may be used for the office purpose, office expenses. Okay, in all these scenario, other than that purpose, the purchases will always be credited. The purchases account is always credited. Okay, or minus item. Is that okay? While goods coming in, it should be debited, otherwise plus item. On moving out of our organization, it should always be credited. But if it is moving out of your business as your regular business operation by adding the margin, then it is sales, named as sales. In all the other cases other than sales, that goes, once the goods are going away from your organization, that will be named as purchases only. As per that assumption, here I use the term purchases. Is that clear? And then donation is going to be debited. Donation is debited, purchase is going to be credited. So the entry being on which date? 20th. On 20th, the entry being donation account debit to purchases. It has a special character. Just now I explained. Recap that one again. The value being 1500. 20th over. 24th, purchased office furniture for rupees 11,200. So we have furniture as well as cash. So both are asset. it means both are debit balance. Because of the purchases, furniture increases, cash decreases. To increase the debit, it should be debited. To decrease the debit, it should be credited. Then the final entry being, 21, furniture account debit, to cash, the value being 11,200. Is that okay? This is on 24th. Let's move on to the next transaction on 29th. Okay. Cash withdrawn for household purposes. So we have two aspects. One is cash, another one is drawings. Whenever the owner brings the cash to the business, the owner is named as capital. Whenever owner takes the money for his own purpose, then it is always named as drawings. You should not have any confusions. Also, a special entry you have to keep in your mind. Okay. See, owner and business. Whenever the money comes in from the owner, named as capital. Whenever money goes to owner's account, that will be named as drawings. Is that okay? And whether owner takes it or not, the business makes any payment to the owner's purpose, that is also coming under drawings only. Is that okay? Here, money is withdrawn for the household, personal purpose. It means owners takes it. So, cash is always debit balance. Drawings is always debit balance. Capital is credit balance. Drawings is always debit balance. Capital is always credit balance. Drawings is always debit balance. You should not have any confusion over that. So, the other name of capital will be the drawings. So, capital is drawing, credit means drawing should be debit balance. Here, because of the drawings will be increasing. Because of the drawings, cash balance is decreasing. As the cash is debit balance, to decrease it should be credited, and drawings being the debit balance, to increase that it should be debited. So, drawings account debit to cash is the final entry on 29th. So, on 29th, the entry here being drawings account debit to cash. This value being 5,000. Is that clear? 29. Now let's move on to the last date of the month, 30th April. Interest received by way of cash rupees 1,200. So interest received and cash. Cash is an asset, so debit balance. Interest received in income is credit balance. Because of receiving of credit means income, it should be increasing. And because of the receipt of cash balance also increasing. So debit also increases, credit also increases. To increase the debit, you have to debit. To increase the credit, it should be credited. So the final entry being cash account debit to interest received account. So 30th, the entry being cash account debit to interest received. Is that okay? The value being 1,200. Now, let's move on to the next transaction. On 30/4/2017, cash sells 2,300. So we have cash and sales. Sales is other name for the goods, right? Goods on sale will be always named as sale. So sale is also debit balance and cash is also debit balance, because sale represents only the asset. As the value of the sale reduces the goods item, it should be subtracted. Cash, because of the sales cash balance increases, it should be addable. So from this it is very clear. Sale by default debit balance. Sale means what? It's nothing but goods. Goods if you have, then it's always debit balance. On sale, that debit balance should be reduced. To reduce the debit balance, it should be credited. So sales should be credited and cash should be debited, right? So on the same date, the entry being cash account debit to sales. The value being 2,300. Is that clear? On the same date, one more transaction. Commission paid 3,000 by check. Rupees 3,000 by check. So commission, and then check represents bank. Okay, bank. So bank is also asset, debit balance. Commission is also an expenses, so it is also debit balance. Because of payment of commission, the debit balance increases. Because of the payment, bank balance will be reducing, so minus. To to increase the debit balance, you have to debit it. To decrease the debit balance, it should be credited. Then ultimate entry being commission account debit to bank. Commission account debit. Commission account debit to bank. Okay, the value being 3000. 3000. Right. The next transaction. Next transaction. 34/17. Telephone bill paid by check. Telephone bill paid. Again, so we have two transactions, two items here. One is telephone bill. Okay, telephone bill, and check means SBI, bank. Okay, bank. Telephone bill also debit balance, bank is also debit balance. Because of this payment, bank balance decreases. Because of this payment, telephone bill is increasing. So that should be addable. So the final value being, the final journal entry being telephone bill account debit, bank account credit. Okay, telephone bill account debit to bank. This value being 2000, this balance being 2000. And then the last one, payment of salaries in cash. Payment of salaries in cash. So salaries and cash. Cash is debit balance, salaries is also debit balance. Okay, both are debit balance. Because of this payment, your cash balance will be decreasing. Because of this payment, the salaries will be increasing, debit is increasing. So the ultimate value being cash is salaries should be debited. So salary account debit, salaries account debit to cash. Cash should be subtracted. Cash account value being 12,000. Remember one more component I am going to guide you here, which is nothing but similar transaction happens the same date can be grouped. For example, this is one type of expenses paid by check, and telephone bill is also another type of expenses paid by check. Can we summarize these two, or can I combine these two? Of course, can be combined these two. Okay, here it is a cash, so it's a separate one. This transaction entry has bank account being common in the credit side, so I am going to combine that. How do I combine? See here, commission account debit side, I just put that value here, commission debit, the value being 3000. And another one is telephone is also in debit side, so telephone account debit, the value being 2000 rupees. And in the credit side we have bank, so to bank we have bank 3000, another bank 2000. Why do I want to pass two bank account here? Rather than that, I can club the value here. 2 plus 3, 5000 rupees should be here. For each and every transaction, after cross verified, the debit total should be equivalent to the credit total. That equation should always be matching. So 3 plus 2, debit side we have 5 and credit side also we have 5, so it's matching, it's clear. Is that okay? Come on, make a note of it.